Hello friends, in our previous lecture we have completed till transaction number 13. Now we are going for transaction number 14. As you can see, the format is ready and we have completed the 13 transactions. Now we are going for the 14th transaction. Okay, goods donated rupees 2000. We are giving goods in charity or we are doing goods as donation. When goods are going out other than sales, then purchase will be credited. Now we have given for charity or donation, so charity or donation, anything can be debited. Okay. If you write donation or if you write charity, both are correct. Account debit to purchase account 2000 being goods donated. Now, donation or charity is a type of expense. An expense will be subtracted from capital. So we need the previous information. Previously, capital was 1,04,000. So as you can see in previous transaction, capital net was 1,04,000. So I will also write 1,04,000 minus donation or charity. It is an expense of 2,000, so the net capital is 1,02,000. Goods are going out other than sales, so purchase is credited. We are not purchasing goods. Goods are not increasing. Goods are going out. So subtract from goods. So yesterday goods were 27,000. Now let's subtract goods through donation. Goods through donation 2,000, so we are left with goods of 25,000. Other things will remain same. Cash 65,000. Then commission receivable 2,500. Then bank 11,000, and goods have already been written. Then capital as came, here it would be rent payable 1,500. Now let's take the total. Here it would be 1,02,000. Here it would be 1,500. So here it should be 1,03,500. Now let's check, is it 1,03,500? 25,000, 65,000, 2,500, 11,000. It's 1,03,500. Is correct. Okay, so these things are over from the previous one. So now we are drawing a line. Number 15. Today we will complete this. So in number 15, furniture of 15,000 purchased from Preksha Furniture Mart. Okay, we are purchasing furniture. Furniture is asset. Furniture comes in. Furniture will be debited. We are purchasing from Preksha Furniture Mart and nothing is given about the payment. So they are the givers and we are just receiving the furniture and we are not paying them. Okay, yeah. So furniture account debit to Preksha Furniture Mart account 15,000. B. Furniture purchased on credit, as we are not paid the amount, from Preksha Furniture Mart. Now furniture is asset, it is coming in. No old furniture is in our books, so directly we will write furniture, it is our asset. 15,000. Now furniture has been written. Now this Preksha Furniture is a name of person to whom we have to pay the amount. If we have to receive the amount, then it would be debited and it would be asset. But we have to pay the amount in future, that is our liability, so it will be shown on liability side. So first, rent payable will be written as it is. See, nothing will be changed here in rent payable, but a new liability is coming, so we will write afterwards. So Preksha Furniture Mart 15,000. Other all things will remain same, so goods will be 25,000. Cash will be 65,000. Commission receivable will be 2,500. Bank will be 11,000. Capital will be 1,02,000. Let's take the total. 15,000, 25,000, 65,000, 2,500 and 11,000. 1,8,500. 1,8,500. Here 1,02,000. Here 16,500. So you can see the totals are equal. 1,18,500 is equals to 1,02,000 plus 16, so it is 1,18,500 itself. College fees of daughter paid 6,000. We have paid the college fees of daughter. Now that is our personal expense. So personal expense is debited to drawings account. And we have paid that amount, so cash is going out, so cash should be. Drawings account debit to cash account. 6,000, 6,000. B. College fees of daughter paid. Now friends, where shall we give the effect of drawings? When we are bringing into business, our capital increase. When we are withdrawing from business, our capital will decrease. So our capital, it will be effect on our capital. So remember, all the expenses, incomes, profits and losses will be given in capital only. Minus drawings 6,000. So the net capital will be 96,000. Okay. Yes. Now cash. Cash is 65,000 minus drawings 6,000. So now net cash will be 59,000. No change in other items. So furniture 15,000. Goods 25,000. Cash has came. Commission receivable 2,500. And last, bank 11,000. Liabilities. Rent payable 1,500. Preksha Furniture Mart 15,000. Let's take the total. 59,000, 15,000, 25,000, 2,500 and 11,000. 1,12,500. Here, 96,000. And here 16,500. So 96,000 plus 16,500 is 1,12,500. Bank has credited for interest and debited 200 for bank charges. So again, two entries will be there in this transaction, and separate entries are to be written because in one bank is crediting and one bank is debiting. Now, two ways this transaction can be remembered. Bank has credited, so we should debit bank. And bank has debited, so we should credit bank. In that way, or bank interest is our income, credit that and bank debit. Bank charges is our expense, debit bank charges and credit bank. In that way also you can remember example. So the first entry for interest, bank account debit to bank interest account. And bank interest is 500. Second, bank charges account debit to bank account 2. B, bank credited interest and debited bank charges. Now friends, bank is crediting interest, it is our income, and the amount is coming into our bank account, so bank balance is increasing. Or in other ways you can remember in such a way, we have seen in theory part also, when bank is debiting, when we are debiting bank, so our bank balance is increasing. Whenever we are crediting our bank balance is decreasing. So we are giving the effect in bank. Bank balance 11,000. Now interest will be added plus bank interest. INT is the short form of the interest, 500. So it will be 11,500. And minus bank charges. Charges short form CRG, 200. So the net bank balance will be 11,300. Okay, bank balance is added through bank interest and bank balance is deducted through bank charges. Now both have second effect in capital, because bank charges is income that would be added and bank charges is an expense that would be subtracted. Okay, you should remember all the incomes and expenses are shown here only. So plus bank interest 500, so it will be 96,500 minus bank charges 200, so it will be 96,300. No change in remaining items. So cash would be 59,000. Our furniture would be 15,000. Our goods will be 25,000. Commission receivable 2,500. Bank has given. Rent payable 1,500. Preksha furniture mart 15,000. Now let's take the total. Here it is 16,500. Here it is 96,300. Here I should take it 11,300, 59,000, 15,000, 25,000, 25,000, 1,12,800. Now 96,300 plus 16,500 is 1,12,000. So again I require the total because our board is filled fully. So total till 13 transactions, this is 14 transactions. It was 3,58,000. I have written in my book. So let me take the total again from 3,58,000 plus 2,000 plus 15,000 plus 6,000 plus 500 plus 200. So 381,700. Again I will take on this side also 358 plus 2,000 plus 15,000 6,000 500 200. 381,700. So I will write it. 381,700. Now we are left with two transactions, but I should not rub this transaction because I need the information. I need the previous information. Okay. Now we are doing 18th and 19th. Again, both are important. Please mark it as important ones. (18th) 2,500 received in advance for interest. Now see, in transaction number 12 and 13 we have seen about outstanding. Outstanding means it is payable in future. Now opposite to it, it is received in advance. Actually the date is to receive, suppose I am telling, here I am giving an example. For rent, actual date to pay the rent is 1st November 2020. So you have to pay the rent or any expense on 1st November. Now friends, if you are paying it on 23rd October 2020, or if you are paying it on 15th November 2020, then what is the difference? Let me explain. Actual date is 1st November. If before 1st November anything is done, that is prepaid or advance. Both words are similar. If you are paying or if you are receiving before the stipulated time, then it is prepaid or advance. Comparing 1st November. Now the next example. If you have to pay on 1st November and you are paying in future 15th November, so you are not paying now. So for 1st November it would be outstanding. And this outstanding can be of two types. Outstanding can be of two types. It can be our payable, it can be our receivable. As you can see here, commission receivable and rent payable. In the same way here also, we can have two types. Paid in advance, received in advance. As this theory has already been seen in the chapter number 2. If any of you are still unaware, then you have to watch the lectures of that second chapter. I explained same thing, but now I am explaining with the journal entries. So if you are paying on time, then it's not a problem. We know that expense is debit and cash is credit. Whenever we have to write the entry for expense paid, expense is debit and cash is credit, or sometimes if we are paying through check, then bank is credit. And if you have to receive any income, then bank or cash is debit. If we are receiving in cash, cash debit. If we are receiving in bank, then bank debit to income credit. This is the normal entry if we are paying on date. Now if we are paying before date or if we are receiving before date, and if we are not paying now, we will pay in future. So for now it is payable or receivable, that is outstanding. Then what are the entries? Then look that 12th and 13th entry I am telling. that whenever we have to receive the commission in 12th transaction, we have written the entry, we have received in cash 3000, so cash account debit to commission account. Because we have received 3000 in commission in cash. Now 2500 commission was outstanding. Now how to decide this outstanding is payable or receivable? The words which is given previously. One commission was received and one is outstanding means it is still receivable, not payable. Because received receivable, paid payable, both are together. So how to write that entry? Whenever we are receiving in cash, cash is coming in, commission is income, commission credit. But when we have not received it, it is receivable in future. If name is given, then name account debit, name will be debited, and commission is income, it will be credited. But in the question, always names are not given. So what we have to write? Commission receivable account debit to commission account. In the same way for the 13th one, rent was paid 4000 and rent was outstanding 1500. So at that time, how to write the entry? Whenever we have paid the rent of 4000, rent is expense, rent account debit, cash is paid, cash account credit. Now same to it, rent is now payable, rent is outstanding. Now that is payable. Reason is that first paid word was given, so with paid we have payable. So again, rent is expense, rent would be debited, and instead name or anything is not given, so rent payable account. So understand the normal concept that incomes are always credited, expenses are always debited. But this is correct for this side only. For this side it is easy, but how? In this transaction, in transaction number 18, they are telling we are receiving 2500 in advance for interest. We have received the interest in advance. We have received cash as came in, cash will be debited. Now we have received interest, so interest will be credited. But if you are writing cash to interest, then transaction will be that you have to receive the interest on 1st November itself, and it is 1st November. But you are receiving before date. So how to write to interest received in advance? Write the full name, because we have not received the interest on time, but we have received the interest before time, because the word is given. Interest is received in advance. So cash debit and interest received in advance account credit. Now cash would be added. Now where this interest received in advance would be shown? On asset or on liability? In capital it cannot be shown, because if I am writing normally interest or normally salary or normally XYZ expense, then it is here. But payable, receivable, advance, outstanding, these are not on time, so where should be written? Now for that, one thing you have to remember, my friends. If it is an asset, it would be debited. If it is liability, it would be credited. This concept is in previous chapter also, and I have explained here also. See that 12th entry. Commission receivable was debited, so it is on assets, because all the assets have debit balance. Rent payable was credited, if you remember, rent account debit, and you can refer the entries also what you have written. Rent account debit to rent payable, so rent payable is credited and it is on liability side. So here also interest received in advance would be shown in liability side. Or if you want this clear explanation, see in first chapter the topic of receivable and payables. The topic of receivable and payables. In that in textbook clearly they are writing all these things. Clearly they are writing all these things, and after completing this, all the 19 entries, I will also give one brief explanation. Okay friends? Yes, so we have received 2500 for interest in advance. Cash account debit. To interest received in advance account. 2500, 2500. Being interest received in advance. Now cash has gained in, so cash would be added. Cash is 59,000 plus interest in advance 2,500, 61,500. Then interest received in advance. As I said, if it is normal interest, then it is shown in capital because it is in income or expense. But this is received in advance, or something is payable, receivable. So you see, if it is credited, then it would be liability. If it is debited, then it would be asset. So it is credited, so it is liability. For that we need to write all the liabilities. Rent payable 1,500. Prexa furniture mart 15,000, and now it would be coming interest received in advance 2,500. All the remaining things are same. Bank is 11,300. Cash is coming. Then furniture 15,000. Goods 25,000. Commission receivable 2,500. Capital 96,300. $61,500, $11,300, $15,000, $25,000, $2,500. 1,15,300, 96,300, 1,500, 15,000, 2,500, 19,000. Now 19,000 plus 96,300 is 115,300. Okay. Now the last transaction opposite to it. In this 18th transaction we have received in advance, and in 19th transaction we have paid in advance. Only that is the change. Okay. Advertisement expense paid in advance 2,000. We have paid, so cash is credited, and what is paid? Advertisement expense. But don't write simply advertisement expense to cash. Reason is simple. It is not expense of this period, this time, because it is before time. So you have to use the word in advance. So advertisement expense account paid in advance account debit to cash account. Advertisement expense paid in advance account debit to cash account. 2,000. Yes. B. Advertisement expense paid in advance. Now, as I said, if it is not a normal expense, and if advance and these words are written, if it is debited, write on asset. If it is credited, write on liability. So advertisement expense paid in advance 2,000. We have paid cash for it, so cash is credited, so cash will go out. So cash 61,500 minus advance Advertisement expense 2000. So it will be 59,500. Cash will be 59,500. All other things are same. Bank 11,300. Furniture 15,000. Commission receivable 2,500. Capital 96,300. Then rent payable 1,500. Preksha Furniture Mart 15,000. Interest received in advance 2,500. So 19,000. 2,000, 59,500, 11,300, 15,000, 25. Missed something, right? Advertising, cash I got, bank I got, furniture, goods are left. Goods 25,000. 115,300 and 96,300 plus 19,000. So again it is 115,300. Okay, now here totals is required for journal. So as you know, previous total till 17th entry is 381,700. So 381,700 plus 2,500 plus 2,000. Now amount are same on both sides. So 386,200. And if you want, after writing the full sum, you check this will be only the. Okay. Now one more thing again for 18th and 19th transaction. Yesterday that payable and receivable, everyone would have been understood that what we have to receive, that is our asset, what we have to pay, that is our liability. Now why these advertisement expense paid in advance and why this is received in advance are our asset, are our liabilities and asset. How? One thing I will explain. See, receivables are our asset. Receivables are our asset. Payables are our liabilities. Understood this much? Receivables are our asset because we have to receive in future, that is our asset. Payables means what we have to pay in future, that is our liability according to the definition. Now paid and received in advance would be opposite to them. See, receivable, so asset, so received in advance would be liability. In the same way, payable is our liability, so paid in advance is our asset. Now what is the reason behind it, I will explain. In this way also you can understand. According to the rule of journal entry also you can know. See, if in the journal entry, if simply expense is not written but in advance name is written, in advance or receivable name is written, then you have to see the balance. See, when you have written the entry for this commission receivable, what you have written? Commission receivable to commission. So commission was receivable and it was debited, so it is on asset. What was the entry of rent payable? Rent account debit to rent payable. So rent payable is credited, so it is liability. So what is debited? It is our asset. What is credited? It is our liability for these expense and incomes which are in advance or prepaid or outstanding or anything. So a simple rule I will give now. Okay, when the expense or incomes are advance or outstanding or prepaid, then if they are debited, they are our asset. If they are credited, they are liability. In other way, how can we understand? Receivable, we have to receive in future, and we have received in advance. So what is the clear-cut concept for this? You know, the same thing I have written. We have to receive on 1st November. but we are receiving on 23rd October, so it is not time to receive. So it is still, if the contract is cancelled, you have to give back the money. Or I may tell you about your school fees. That if you are, now you are 11th standard, you are paying in advance the fees of your 12th standard also. So if you are paying that fees in advance, then it would be your asset if you are paying in advance. And if you are receiving in advance, it is your liability. The reason is simple. If you are not studying in same school in 12th standard, you will get back the fees. So this is our liability. Receivables are our asset, but interest received in advance is our liability, because it is possible to give back also. In the same way, payable we have to pay in future, that is our liability. Paid in advance is our asset, because in future we can get back the money from them if it is possible. Or you remember the simple rule that this advance receivable, if they are debited, they are our asset, if they are credited, they are our liability. We are writing the simple rules. Rules for special transactions. If incomes and expenses are written with words like receivable, payable, outstanding, advance, prepaid, then rule for them is, if they are debited, they are assets, if they are credited, they are liable. First, write this simple rule. If incomes and expense, see, interest received in advance, advertisement expense paid in advance, are with words like receivable, payable, outstanding, advance, prepaid, then rule for them is, if they are debited, they are assets, if they are credited, they are liable. Then again, classification of assets and liabilities. Classification of assets and liabilities. How? Receivables, they are our assets. Receivables, they are our assets. And they are in which form? They are our debtors, means they are our customers. As you know from the journal entry, whenever we are selling the goods and person is not paying the amount, then we are debiting him and sales account is credited. We are debiting them because we have to receive in future, so they are our assets. Then bills receivable, just like asset, Bills receivable is a written document. We have to receive the amount in future. So again it is our receivable. Again it is our assets. Incomes receivable, or we can say is outstanding, because in question the word outstanding will be given. You have to understand that it is receivable or payable. So according to the words you can understand. And expenses paid advance. See, all the first three things returns are of income only. From sales we can get income, so that are our customers. From bills, that is our receivable, that are our assets, receivables. From incomes, these are also incomes. But here expense have came, but which are the expense which the time for which we have not came. The time have actually not came and we have paid in advance, so it will be our assets. So all these things are related to income. These things are related to expense, but which expense? The expense for which the time has actually not come, before time. So that is the thing. Now in the opposite way, payables. What are our payables? That is our liabilities. Which are the things? So all things will be opposite. Debtors are our customers, so here it will be creditors from whom we are purchasing the goods. And that are our suppliers also. We have to pay the money to them, so they are credited and purchase is debited. Then bills payable. The word only specifies that we have to pay the amount in future. Opposite of debtors is creditors. Opposite of customers is suppliers. Opposite of bills receivables are bills payable. Opposite of incomes receivables, here we will have expenses payable. Opposite of income is expense. Opposite of receivable is payable. And that is also outstanding. The word outstanding only will be given. You have to understand that it is payable or receivable. And opposite of expenses paid in advance, here we will have incomes received in advance. Incomes received in advance. See, the first three things will be matching, and the last thing, this expense and income will be opposite, because before time. These incomes and expenses, the last fourth thing in both are before time, so they are written in this way. So see, receivables. This commission receivable or Jaslin name was written and then Himani name was written, so they are our debtors and creditors. So our debtors are assets, our creditors are our liability. That Himani was our liability and Jaslin was our asset, that debtors. Bills receivable and payables, that have not come in journal entry, it will come in the next chapter. Incomes receivable, see, commission is receivable. Expense payable, see, rent payable. Then expense is paid in advance, see, advertisement expense paid in advance. And incomes received in advance, see, interest received in advance. This rule also can be applied, and this you can remember from chapter 1 also, that what are our assets and what are our liabilities. So here friends, we are completing our chapter. Tomorrow we will start the next chapter, subsidiary books. Till that time, complete all these things and send it to me as soon as possible. That's all. Thank you so much.